Our next guest saying that the dip buyers came in for the sale yesterday, but will the buying continue? Joining us now, we've got here on set, live in living color, Kenny Polcari, Slate Stone Wealth Chief Market Strategist. Great to see you here, Kenny, and thanks for taking the time. So, as we're thinking about some of the dip buying opportunities that some investors are trying to take advantage of right now, what are you kind of lining up and where you would be putting additional chips on the table?
So I think you have to take a broader look at where we think the market's going over the next 6 or 7 weeks, just because we're in that seasonally weak time in the market, August through October. I think that the August lows of 51.16 are likely going to be tested again, which means that, you know, as an investor, as a long-term investor, you just need to be a little bit cautious. But look, key names, Nvidia, that's down 25% off its June high, is a place that I would actually be I would put money to work there now.
You think it rallies back to the high?
Yeah, well, I don't think it rallies back to the high, but I think it's on sale 25%. As a long-term investor, I'm not a trader, so I'm not looking for it to rally 2 points or 10 points and then sell it. I'm in there to buy it, to hold it, right? But when something goes on sale at 25% down off the recent high, then you have to at least look at it. Now, if you're worried about further downside for the broader market and you think it's going to get dragged with it, well, then just sit back a little bit and wait. I think, you know, for most of the clients, that's the conversation I'm having just about being patient, right? Because patient in this case could be a virtue.
Kenny, what do you think the outsized influence is going to be for Nvidia looking forward for the broader market? And I bring that up because we were talking to Citi's Scott Kroner earlier in the show, and he was talking about that shift that we certainly have started to see over the last couple of months. Does that continue?
Yeah, listen, I think it's a little bit overdone, that shift that everyone's worried about. Look, I think we're at the very infancy stages of AI. I think Nvidia sits at the nexus of this tech revolution that's happening. Nvidia, for me, is a key name, right? Now, do I think there's going to be fits and starts, and it's a high growth name, so it's got lots of volatility in it? Absolutely. But over the long term, I think Nvidia is just a core name and a core portfolio. And I think investors have to depends again on who they are, what their time frame. Are they a trader looking to day trade it? Are they an investor looking for a good entry point to either add to or initiate a position?
Timing your stock purchases can certainly increase gains, but even with a clear market leader like Nvidia, it can be difficult to determine whether to buy or sell the stock at this time. Investors can evaluate whether Nvidia stock is a good buy at this time by looking at chart signals and several technical indicators. Nvidia fell 14% last week, plunging sharply below the 50-day moving average. Tuesday morning, shares rose, adding to Monday's 3.5% gain. However, should you be buying Nvidia stock at this time? Morgan Stanley analysts said on Monday that worries about the stock's diminishing gross margins were exaggerated, maintaining an overweight and top choice rating with a price target of 150. Broadcom's results had an impact on the stock on Friday. Though its sales guidance was disappointing, Broadcom's earnings and sales exceeded expectations. The future of Broadcom may affect the market for AI processors. The 50-day moving average of Nvidia shares is still 9% down, as per the chart analysis. The revelation that the Department of Justice was looking into antitrust laws pertaining to the artificial intelligence chip business on Wednesday caused shares to drop. Reports state that the corporation first received questionnaires from the DOJ, but now subpoenas have been sent. According to Dow Jones Markets data, the stock had its largest one-day market cap loss for any U.S. company on Tuesday of last week when it fell precipitously below the 50-day line. Currently, Nvidia's market value is less than $3 trillion. After Nvidia's earnings on August 28, shares dropped 6.4% despite the company exceeding analyst projections. Nvidia revealed profits that exceeded expectations on Wall Street. Sales of $30.04 billion came in 122% ahead of the same period last year and beyond analysts' expectations of $28.7 billion. Earnings were 152% more than the previous year and above estimates of 65 cents at 68 cents per share. The leader in artificial intelligence chips also provided stronger guidance for the current quarter, predicting $32.5 billion in sales as opposed to $31.7 billion in projections. Following the release of the earnings results, the stock rose above the 50-day moving average. However, by the end of the trading day, it had fallen below the line once more. Risk management is as crucial as timing stock selections in light of the ongoing market volatility. Nvidia's stock is currently 9% below the 50-day moving average following its decline last week. Perhaps the next buying opportunity is at its split-adjusted all-time high of 140.76. The stock momentarily cleared a trendline entry at 130.75 ahead of earnings. Investors may be able to purchase early with trendline entries. However, they are also more assertive entries, particularly in front of earnings. The stock doesn't move over that mark. If you want to keep up with Nvidia's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
To be joined by Toshiya Hari. Toshiya is, of course, the lead analyst covering semiconductors at Goldman. Thank you so much for making time with us. We got to start on the Nvidia of it all. You've got to buy on Nvidia despite the record sell-off we've seen in the stock over the last week. Make the case. Why are we still a buy?
Yeah, thank you for having me. First of all, it's great to be here. So we've had a buy rating on Nvidia for quite a long time, and to your point, the recent performance hasn't been great, but we do remain positive on the stock. A couple of things. I would say, first of all, demand for accelerated computing continues to be really strong. We tend to spend quite a bit of time on the hyperscalers, the Amazons, the Googles, the Microsofts of the world, but you are seeing a broadening in the demand profile into enterprise, even into sovereign states. Number two, I think their competitive position continues to be really strong. I think at this conference you'll hear from Nvidia, Jensen Huang, we have Lisa Su, we have a couple of the hyperscalers at the show as well. So there is a bit of a merchant versus custom silicon debate going on, but we do think within merchant silicon, Nvidia is the go-to. And even versus custom silicon, they've got the edge in terms of the pace of innovation. And last but not least, from a valuation perspective, perhaps for the wrong reasons, but the stock has come in quite a bit. On our numbers on next year's earnings, the stock is trading in the low 20s, which I think is very inexpensive for a stock with this kind of profile.
Do you think the sell-off is just overdone?
Yes, we do. I think clearly the stock had great momentum until sort of the June, July timeframe, and stocks never go up in a straight line. So we kind of appreciate why the stock has given back some. I think the debate around is this sustainable into 2026 is a fair debate.
So people are looking beyond 2025. They're valuing Nvidia on 2026 already?
Valuing on 25, but depending on how the outlook is into 26, what kind of multiple you apply to 25 numbers is kind of the key debate. And interestingly, we were having a very similar debate 12 months ago in 2023 when the stock was sort of range bound the back half of 23, and that was due to, again, multiples going from, call it 50 times down to 30, 25. And back then it was, okay, 24 is kind of in the bag, but what about 25? So we're having a very similar conversation as of today into 26.
The fact that earnings moved the stock in 2023 and 2024 is clear evidence of the importance of fundamental performance. Nvidia had an incredible 239% run in 2023. The stock rose 2% in August following a 5.3% loss in July. This year it has increased by little over 100% thus far. Just one of the four pillars of investing is fundamentals. The other three are market direction, risk management, and a stock's technical strength, which shows how the stock has performed in relation to other stocks. Early in August, news broke that Nvidia was going to postpone its upcoming AI processor for at least 3 months because of a design issue caused the stock to plummet. Additionally, Nvidia's data demonstrates that throughout the sell-off, the stock lagged the S&P 500. According to Bernstein analyst Stacy Raskin, the 3-month delay won't significantly affect the market share of the industry leader in chips, according to reports from Reuters. Furthermore, the demand-side picture is still favorable as all of the major hyperscalers raise their capital expenditure estimates in an effort to strengthen their positions in cloud computing and data processing. Following news that the Department of Justice is looking into the company's acquisition of the artificial intelligence startup Run.ai, shares also dropped. Investigations are also being conducted into the company's practices of selling multiple AI chips to cloud providers. The leader in AI has also partnered with Microsoft to enable the most recent AI software to run on Nvidia's GPUs. When several applications of artificial intelligence to search were demonstrated at the Google AI conference in May, Nvidia's stock price surged over the handle buy mark. The massive search engine also gave a sneak peek at an Android feature that warns users of scams when they're on the phone. Although Nvidia's chips compete with Google's tensor processing units, Nvidia commands a larger share of the data center AI chip market. On a scale from A+ to E, Nvidia's stock has an accumulation/distribution rating of E. This is a reflection of the recent strong institutional selling. On the basis of a trading plan, Nvidia CEO Jensen Huang sold $580 million worth of stock between June 14 and August 9. So what does this really mean for Nvidia's stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Back on this earnings cycle so far too, there was this big question about ROI on AI, investors getting a little bit of fatigue perhaps on the amount of money being spent on AI. How much of a headwind could that be for Nvidia if companies are getting dinged for their spend on the expensive Nvidia chips?
Yes, I think it is something to look out for. Again, lack of customer ROI, whether it be the hyperscalers, whether it be the enterprises that are trying to leverage AI, that becomes a problem at some point, right? We need monetization for this to be sustainable. I think the hyperscalers do make a pretty good case in terms of their ROI. I think if you look at ad revenue, you look at things like Instagram, the platforms, they are leveraging AI and they are getting the return. So we're confident as a collective unit that this is sustainable, but to the extent there's a lack of monetization, that could be an issue for not just Nvidia, but for the overall ecosystem.
You mentioned the hyperscalers, that's the Amazons, Metas, Microsofts of the world. They're building their own chips now, and they're certainly cheaper than Nvidia's. Can they ever compete directly with Nvidia and take up more market share than they are currently?
So they do. They have been competing with NVIDIA in some shape or form. I would say most of the custom silicon is there to address internal workloads. In the case of Google, it would be Google Search. But GCP, which is external looking, they're still buying a boatload of NVIDIA GPUs. And you can make the same case for Amazon. So I think you'll see a bifurcated market where, again, the internal workloads are addressed by their custom internally designed silicon. But what's outward looking, they'll continue to buy NVIDIA GPUs, AMD GPUs, and so on and so forth.
The graphics processing units from Nvidia contribute to the speeding up of AI applications and data centers. The company took the lead in creating graphics processors, which improved computer gaming to a great extent, according to many. In addition to gaming, Nvidia chips are used in the robotics, automotive, and healthcare sectors. In March 2023, generative AI made great strides with OpenAI's ChatGPT. Nvidia's AI-capable supercomputer, according to CEO Jensen Huang, cleared the path for the iPhone moment of AI. That enabled Nvidia to improve its performance. In late 2022 and early 2023, it revealed 3 quarters of year-over-year sales declines and 4 quarters of falling profitability. However, in the last 2 quarters, the company's top and bottom lines both grew at historic rates. Analysts have given Nvidia shares a solid relative strength rating of 97. Its 3-month RS rating, however, is just 13. The stock has a composite rating of 92 and an EPS rating of an ideal 99. One of the Magnificent 7 stocks that topped the market in 2023, and for a large portion of this year, is Nvidia. Several of these industry titans are Nvidia's customers and depend on their cutting-edge technology. Another stock that a lot of analysts predict will do better than the market in 2024 is Nvidia. When deciding whether to purchase or sell a stock, chart patterns can be a useful tool. With Nvidia, the 50-day moving average is still below. When the stock breached that level of support with significant volume, a sell signal was generated. Before it can be purchased, the stock needs some work. It needs to establish a base and reclaim that level at the very least.